I just made another $4,000, and in the past 4 weeks, I made over $28,000 trading this strategy that I'm about to break down for you and teach you. Also, I will show all the trades that I took the past 4 weeks to get to this $28,000. And finally, at the end of the video, I'll show you verified Myfxbook results for this account.
Oh, I was about to play FIFA, but I got an alert that my trade hit take profit, so I had to close it in profit for $4,700, guys. I officially made over $28,000, almost $29,000. This is the whole history of how I made it. And I want you to look at every single trade and look at the difference between my wins and my losses. My losses are like 400, 500, 900, 800. I had a big loss on gold just because I miscalculated lot size for 1.6 thousand. But everything else is like in the hundreds. And when you look at my wins, 4,000, almost 2,000. You have some break evens, you have some partials, but eventually 1.2K, 3K, 3.3, 2.5. How my winners are much bigger than my losses. And that is why, and that is how I made $29,000. Of course, it's a live account. And I made all of this in the past, what? I started 6th of September, and today is 4th. So literally a month I turned this account. So welcome you to my office. Here's the trade that I just won. Here's me calling out this trade in the community. And also, guys, if you want to join my community, check the description, projectnlc.com, and you can join my community and see all my trades, see me live trading from Tuesday to Thursday every single week. Talk to me, talk to other people in the community, and of course, learn the strategy that I'm about to show you in much more detail. So my strategy consists of 4 main things. First, building a market directional bias. Second, finding the previous session liquidity. Third, finding the entry model. And finally, executing and trade management. So let's jump into the chart and let's take a look.
So like I said, to correctly execute my trading system, you need to do these 4 things, which I just talked about. And you have to do them step by step. So we're going to start with number 1, which is building a market directional bias. So let me clear these charts. And the way I find the bias is I start with a weekly time frame. But the biggest mistakes what people do when they start with a weekly time frame, they look at the price action. You don't really need to worry at the price action unless you are very, very long-term trader. If you are scalper or day trader, all you need to focus is the single candle. So what my current weekly candle is looking like and what my previous weekly candle look like. So if I'm looking at the previous weekly candle, I see that we have some resistance, some supply here, and the previous weekly candle, as it was approaching, you can see here a lot of momentum, and which every week with every candle, that momentum is dying down. So I can expect some type of bearish movement from this area where the price is at right now, or for this week that we're trading the markets. That's all the information I needed to know. Now, as I'm dropping to lower time frames, such as daily, I can start to look for, market price action, the change of structure, and in this specific example, I can see that the price was moving higher, forming higher highs and higher lows, and after a while the price started moving lower, forming lower lows and lower highs. So on the weekly time frame, our bias was that we might see some bullishness, but we also can expect bearishness. And as we drop to daily time frame, we can see that there is some bearish confirmations. Also, if we look to the left, there is a massive supply on the daily time frame. And if we look at the history at the previous days, we can see that the price already rejected these levels with the wick and like I just showed you, the continuous bearish market structure. So more bias towards the bearish side again. And as we drop to lower time frames, we can start to look for supply and demand liquidity areas. So if I manage to find my list of things, I hope I didn't delete them. Did I delete them? Okay. So my second step is basically me finding my liquidity areas. Now, to find the liquidity areas, there's one very, very important thing, which is we need to turn on the sessions indicator. Here, you can find it for free on TradingView, and it is called Asian Session Range. It is for free. You go to the indicators page and then type Asian Session Range, and you can plug it in. So now we start to see the previous sessions. And let me quickly explain this indicator. The gray zone is the New York session. The green zone or the green box is the London session, and the blue box, blue borders are Asian session. So we need to focus when we look at indexes only at a New York session range and New York session liquidity. Looking to the left, we won't be looking for potential supplies because these zones are below, right? So these are only potential demands, such as right here, right? So if my bias was bullish, I would have likely looked for buys here, which would also worked. But since my bias was bearish, I'm only looking for shorts. And since there is no price action to the left on this session that I can use supply from, I move to the next one. Here, it's the same situation, so I'll move to the next one. And now here, as I'm looking, I see a massive liquidity from the prior New York session and a beautiful supply zone at the very beginning of the session. So I mark it up, I go all the way to the right, and then I see that the price is approaching this level. Now, I will not be looking, if the price breaks this level, I will leave this asset alone and I will wait for other confirmation. Now, why I'm not looking for buys is because we just did step number one. Step number one is building a bias. And since our bias is bearish, we're only going to be looking for shorts. This is why we didn't look for demand areas in the sessions below. We only look for supplies. So now we have the bias, which is bearish, and we have a beautiful supply. Now, what I want you to understand about this trading system is you cannot go to number 2 without doing number 1. So 1, finding the bias. We did that. That's a check. Number 2, finding a liquidity. So New York, liquidity. We have that as well. Now we can move to step number 3, which is entry model. So I'm going to call this EM, entry model, right? So we have a beautiful supply, and now we can drop to lower time frames to look for entry model. And as I'm dropping to 10-minute, 15, 5-minute time frame, I want to see the entry. Here we can see that the New York session has started, as you can see. So we're going to expect a lot of volume coming in, especially this push was caused from NFP. So on the open of New York, we can expect some nice volume. We start to see that at the very beginning. Look, that's how I read the candles, right? Look at the massive push to the upside. This is a lot of orders. This is a lot of liquidity. Also here we have a massive demand, which is an imbalance as well, right? Coming from this candle. So we have space to fill. Also, as I'm looking at the price action, what I see is that we have a massive push And now, as soon as we approach this level, we stopped. Like, right? Whenever you have this type of strong price action, you at least expect the price to have like some long wicks rejecting coming of such a strong momentum. But here on the very open, right away, we see that the price is failing. So a lot of sell orders is sitting at right exact this area, which just confirms that my supply is valid. So I continue to monitor the price. I start to see the momentum building up. I can drop to lower time frames, but I don't really need to because I have my entry criteria, and all the people inside of my community knows how much I love this candle. Basically, this candle literally just triggered my entry. Also, we start to see some lower lows, lower highs if we drop to lower time frames, such as 2-minute time frame. So we go back to, let's say, 10-minute time frame. I love this candle, and you guys know why. So basically, I enter this trade right here with stop loss above, and we take profit at this demand. And this is how this trade played out. Like right away, literally straight to the profit. And that's how I trade. Now, like I said, there's 4 steps. And the 4th step is trade management and execution and trade management. So execution, X, and TM, trade management. So execution, we just talked about it. We have the entry model, we execute the trade, and we manage the trade. Now, this is a perfect example of one of the ways to manage the trade, and I'm going to show you different examples. So let's go to the left. Let me show you a little bit something more reasonable than just a big drop, right? The way I manage this trade, look. So if I enter the trade to go short, right? So I enter the trade here. Let me do this. The price was moving higher. So I decided to enter the position short here, correct? And my stop loss is here. And my take profit is all the way down here. So the way I manage my trades is basically very simple. I always teach and preach to all my students and all my members that real traders don't predict, they react. And the way you need to manage your trades is by reacting on how the price moves along the levels towards your take profit target. So first, after you execute the trade, what you need to do is you identify potential threats for the price as it is moving to take profit. So here we have a big support. Here we have another big support. You can do supply, you can do demand, whatever you like. And then we have another here, let's say demand. So the way I manage my trades, once the price drops to this level, right, I do nothing. If it moves a little bit up, I do nothing. If it starts to move around like this and starts to move higher, I take partials. Okay? That is how I take partials. Now, if the price just breaks through, goes crazy down through my level to the next level, I hold the trade. There is no point of me closing the trade because the price is going down so strong. Now it starts to move here a little bit and then goes down to the next trade, the next zone. And on the next zone, it starts to move higher, for example, breaks above the zone. I close partials here again. I react to the price moving above my zone's potential threats, and I am safe, and I close the partials. Now, let's say the price breaks through all levels. That's fine. I just hold the full position. I take full profits and full position. So what you need to do in simple words, see and react how the price moves to your threats. Now, you can say, oh, I wish, let's say the price does this, right? You can say, oh, why did I close here? Or why did I close here? Or why did I close here? The price ended up going all the way into take profit. Trust me when I say this, there will be so many times where the price will go back and will take you out at break even or even stop loss, and you will wish that you closed some partials. So in the long run, this will always win. This way of trading and trade management will always win. And this is how, basically, shortly, guys, said how I trade, my trading system and my trading strategy. I've been doing this for 8 years, and you can see the results for themselves. Right now, let's go to Myfxbook and let's do analysis on my trades and my performance on Myfxbook.
And here, guys, finally, as promised, the Myfxbook verified results, as you can see. The ads. Here, I can refresh again. Hopefully it doesn't show the ads again. Real account, we have 111% profit, $27,755. This is the growth. As you can see, nice and steady, with little pushes to the downside, but overall movement to the upside. Let's see, average loss is around 663. Average win is 1.2K, but that's with break evens. That's not really accurate. Then longs won 75% win rate, shorts 64% win rate. Then we have expectancy rate. I don't know what that means. And the growth for September was, 83%. And for now, October is 15%. Of course, I'm risking anywhere between 2 to 8%, 9% per trade. So that's a high risk account, but here it is. All of the trades, once again,